Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at Chapter 5, Activity 4. In this activity, we are going to focus on the cash flow statement. Now, when we look at the cash flow statement, it is important to understand its inflow and outflow of cash. Inflow is always shown no brackets. Outflow must be shown in brackets. The cash flow statement consists out of the operating, financing, and investing activity. Make sure that you understand what does each one of those activities mean. What goes into those activities. We get the information from our income statement and our balance sheet to complete the cash flow statement. Familiarize yourself with your answer booklet. On your answer booklet, you can exactly see what is required of you. Question 4.1, you need to do the reconciliation between profit before tax and cash generated from operation. Question 4.2, we need to calculate the dividends paid and the net change in the cash and cash equivalents. And then we have to complete the cash flow statement. We have to prepare the cash flow statement for the year ended 30 April. If we look at the information provided, you are provided with an income statement for the year ended 30 April 2021, an extract from the balance sheet. Make sure that you look at how the information is given to you and then go through the additional information. Starting with question 4.1. Now, as I've done in the previous activities, when we complete a question and we find that there's something relevant that needs to go into another question as well, we are going to do it at exactly the same time. We do it so that we don't forget anything. If I start with the reconciliation between profit before tax and cash generated from operations, we need to look at the net profit before tax. To find the net profit, we need to go to our income statement. But now they provided us with the net profit after tax, which means we need to calculate the net profit before tax. If we look at our additional information, income tax was calculated at 28% of the net profit. This means to calculate my net profit before tax, we need to take 100 divided by 72. And that will provide us with the net profit before tax. A hint, the net profit before tax can never be less than the net profit after tax. If I now look at my next step, we need to eliminate all non-cash items. So if we talk about non-cash items, we talk about things like my depreciation, interest expense. But interest expense, be careful. You need to look at what if interest is capitalized and what if interest is not capitalized. If I want to work out my interest for this accounting period, and if I want to work out the interest paid. Interest paid forms part of my operating activity and it's shown on the cash flow statement. If you now look at depreciation, we find depreciation in our income statement. Depreciation has a question mark, so it means I need to solve that. Now we need to go to the additional information. When we get this type of question where depreciation is a question mark, we need to solve it. I suggest open the tangible asset at book value. And you can also use this as part of the investing activity to calculate additions, the proceeds from the sale of assets, which will be asset disposal. And if we look at additions, it will be purchase of non-current assets. Starting now with what information we've got. They provided us with the balance fixed assets at the end of last year and the end of this year. Then they said property purchased, equipment was sold at carrying value. At school level, this will always be at carrying value. You do not need to worry about asset disposal where there's a profit or a loss on the disposal of an asset. For enrichment purpose, if we have a profit on the sale of asset, we would have needed to eliminate that in note number 1 of the cash flow statement. All non-cash items need to be eliminated. The same as with loss on disposal of asset. Again, this is not part of the grade 12 syllabus. We only focus on carrying value. I'm now going to take the information where it's supposed to go. The balance in the beginning plus additions minus disposal at carrying value. Now, this is at carrying value. We had to calculate that. They provided us with the cost and they provided us with the accumulated depreciation. We've got the balance at the end, so now we can calculate the depreciation, and that will reflect in my adjustment in respect of depreciation. Take note, it must be no brackets. Why? When we eliminate expenses, to eliminate that, we need to add. Why? On the income statement, it would have been subtracted. So to eliminate that, we need to do the opposite. The next item we need to eliminate is our interest expense, 104,000. Again, no brackets, it's an expense. It would have been subtracted on your income statement, so to eliminate that, we now need to add it. Now we can calculate the operating profit before changes in working capital, net profit before tax, plus the depreciation, plus my interest expense. Now, at the same time, we are going to complete the cash flow from investing activity. If I look at additions and disposal, that must appear in my investing activity. Investing activity means we've got money available. What is our option? One option, we can invest in buying additional non-current assets like property, equipment, and vehicles. But from that, I could also have disposed of a specific asset. So when we look at the purchase of non-current assets, that is an outflow, so it must be shown in brackets. Proceeds from sale of asset is an inflow, therefore no brackets. I want to point out the following. You cannot just take the difference from the 2020 to 2021. You have to complete the tangible asset note because we need to look at the movement. The tangible asset note, or you just simply do a tangible asset at book value T account. Cash effect from changes in working capital. If we look at working capital, we talk about our current assets minus current liabilities. Current assets and current liabilities forms part of the balance sheet. Your note number 4, 5, 6, and 8. Note number 9. Make sure that you know your formats. Because if I say to you, everything is included except, you need to know what is that everything which must be included. Now, if we look at this, we are going to look at our inventories, trade and other payables, trade and other receivables, to see if there was an inflow or an outflow. Now, very important, dividends paid, income tax paid, forms part of the operating activity. It's calculated separately. So it means that we will need to exclude that when we look at our trade and other receivables and our trade and other payables. Starting with our inventory. It's clear from last year to this year there was a decrease. Now, what does a decrease mean? What effect will that have on the cash flow statement? If you're not 100% sure, we can always do a T account. If you look at inventories, the balance at the end of last year, balance at the end of this year, there was an increase. For every debit, there's a credit. So we take the difference to the cash flow statement and we're going to show it in brackets. Why? Because an increase in inventories will have an outflow effect. You can study that, or you can do the T account if you're not 100% sure. A decrease in inventories will always have an inflow effect. If we now look at trade and other receivables and we look at what does it consist out of, it consists out of our debtors control and SARS income tax. But now SARS income tax is calculated separately, so we need to exclude that. So we're just going to take the difference. We can see that there's a decrease from last year to this year, and a decrease will have an inflow effect. We use the difference and we take it to the reconciliation between profit before tax and cash generated. You can study. A decrease will always have an inflow effect with trade and other receivables. An increase will have an outflow effect. If you're not sure, do a T account. If I look at trade and other payables, trade and other payables consist out of all of those items. Bank overdraft, shareholders for dividends can form part of current liabilities on the face of the balance sheet. But now, what do I include in my calculation? Everything is included except for shareholders for dividends, SARS income tax, and bank overdraft. Shareholders for dividends, we're going to use in calculating dividends paid. SARS income tax, we're going to use it to calculate income tax paid. Bank overdraft is going to be used in the net change in cash and cash equivalents. Now, very important. If you look at accrued expense, if interest is not capitalized and they say to you that interest was still outstanding from the previous year and the end of this year, I need to exclude it then because interest paid will be calculated separately. If interest is capitalized, I don't need to worry about it. Then we need to include this in our calculation. So what I always do, I take 2020 and I add what I need to add, what I need to include, the same as with 2021 and 2020. On my T account, I'm going to show end of last year, it decreased from last year to this year, a decrease for every debit, there's a credit, the difference is 24,700 and that will have an outflow effect. So in my answer book, cash effect from working at capital, decrease in trade and other payables will have an outflow effect. You can study an increase in trade and other payables will have an inflow effect. Now that we've done with that, we can solve the rest of this note to get the cash effect from working capital minus plus minus, and to get the cash generated, we take the operating profit before changes in working capital plus changes in working capital. Now at the same time, you have to complete and prepare the cash flow statement. Take it to the cash flow statement, question 4.3, and show cash generated from operation. Make sure that your answer corresponds with that which you have calculated. To complete the dividends paid, to calculate what is the dividends paid, this can sometimes be a bit complicated. Always look at how the information is given to you. Sometimes doing T accounts, it's much easier to find what is the dividend that was paid, to find the interim dividend, for example. Sometimes it's not required to do a T account at all. They can provide you with financial indicators to find missing figures as well. You need to know that dividends paid always consist out of the dividends declared at the end of last year, plus my interim dividends. Now, if we look at the information, they said to you, interim dividends was declared and paid on 31 October 2020. Final dividends declared on 30 April were 50 cents per share. They didn't provide you with the interim dividend amount. It means we need to calculate it. We need to solve that. So now my suggestion is open T accounts, fill in the information which you've got, and find the missing figures. In this question, I needed to use the appropriation account to find what is the total dividends on ordinary shares. Refer to your company's new transactions theory booklet if you are not 100% sure on how does the ledger accounts / T accounts work when we calculate the dividends, interim dividends and final dividends recommended. Also, in that chapter, we looked at all the different ways in how the appropriation account and the retained income note with regards to, not the note, the ledger account, how it could be asked. Looking at the information now, we've got the balance at the end of last year, the balance at the end of this year. Balance brought down means balance carried down. So this is my starting point. Whatever was recommended at the end of last year is paid this year. This forms part of my first calculation. The final dividends recommended at the end of last year. For every debit, we would have taken it to the credit side, dividends on ordinary shares, and that would have gone to dividends on ordinary shares as final dividends recommended. You should know dividends on ordinary shares always consist out of interim dividends plus the final dividends. If I now look at the appropriation account, it's always the net profit before tax minus the income tax minus the dividends which we want to calculate now. We are going to show the retained income in the beginning, end of last year, and what was the retained income at the end of this year. To find the net profit before tax, we've calculated that in 4.1. Again, there's the calculation. We take the net profit after tax times 100 divided by 72. The retained income at the end of last year was given to us and the end of this year. My income tax, we can either take the net profit before, we can take, the net profit before tax minus the net profit after tax. Or we can just say the net profit after tax times 28 divided by 72. It will give you exactly the same answer. Now we can find the missing figure, the total dividends on ordinary shares. Once we've got the total dividends on ordinary shares, we can calculate the interim dividends. Take the credit minus the debit side. So my total dividends paid is my interim dividends plus the final dividends recommended at the end of last year. Make sure that you take it to question 4.3 in your cash flow statement, dividends paid, and it must be shown in brackets, your final answer, because this is an outflow. When we look at the net change in cash and cash equivalents, we need to look at note number 6, your cash and cash equivalent. But now it says see information E and it's a question mark. Always look for a bank overdraft under current liabilities. Now if we go to information E, you would notice that bank is a question mark. So we don't know what was the bank balance at the end of this year. We need to calculate that. Now to calculate that, we need to find out what is the current assets, but we cannot find out the current assets because there's a question mark. So to solve this, we need to use the current ratio. Take note of how the ratios can be incorporated into cash flow statement as well to find the missing figures. Current ratio is calculated by taking your current assets divided by your current liabilities. I can solve the current liabilities. We're going to add everything that is highlighted to get our total current liabilities. Now we're going to take X is current assets divided by current liabilities, which we've just calculated, equals 1,5, which is given to you. So to find X, we're going to take the current liabilities times 1,5. Now that we've got our current assets, we can find the cash and cash equivalents. If you look on the balance sheet, we take the current assets minus inventories minus debtors control. Completing now the net change in cash and cash equivalents, I filled in the information which is given to me. Bank overdraft must be shown in brackets. So to find the cash and cash equivalents at the end of 2020, we take minus plus. We've calculated the cash and cash equivalents by using the financial indicator for the end of 2021. To find bank, we now need to work our way up. 40,900 minus 1,500. Now we can calculate the net change. If you look at bank, be very careful. I need to actually add those two figures. And if you think about it in a simple way, if you had negative 50 in your bank account and now you've got 50 Rand, it means that you needed to deposit 100 Rand into your bank account to go from having a negative and unfavorable balance to now having money into your account. So when you get a bank overdraft and you look at this example here, we take 2020 and we plus 2021, and that equals the net change. Petty cash, there was an increase of 500. And now if I add those two together, and if I add those two together, it must equal exactly the same answer. And those totals will go to 4.3, prepare the cash flow statement. The balance in the beginning, my cash and cash equivalents. The balance at the end for cash and cash equivalents. And there is my net change. Sorry, there. If I look at now 4.3, we've done 4.1 and 4.2. We've already calculated cash generated from operations, interest paid, dividends paid. We've looked at the cash flow from investing activity, purchase of non-current assets, and proceeds from sale of assets. So if we look at the operating activity, what is left for us to do? We still need to calculate the tax paid. Tax paid can be complicated. Why? Because if you look at SARS income tax, it can have a favorable or an unfavorable, let me rather say, it can have a debit balance or a credit balance, which means either SARS owes us or we owe SARS. So this can be found in your trade and other receivables or in your trade and other payables. I suggest do a T account. There's two ways in which you can approach it. You can either do the logical approach or you can do a T account. When we look at a T account, we are going to fill in the information and we take it from the balance sheet and we look at current assets end of last year, SARS income tax, which shows SARS owes us, that is a debit balance. My income tax is calculated by taking the net profit after tax times 28 divided by 72. At the end of this year, if we look at current liabilities, SARS we owed SARS 7,200. That is a credit balance. Balance brought down means balance carried down. So if I want to calculate my tax paid, we take the balance 29,350 minus plus 7,200. And that is your calculation that must be shown in brackets. Tax paid is an outflow, so it must be shown your final answer in brackets. If we now look at cash flow from investing activity, what else forms part of that activity? Remember, we've got money available. What is our options? We can purchase non-current assets or we can invest it in a fixed deposit. But now you need to remember, when we invest money into a fixed deposit, that will be an outflow of cash. But what if that fixed deposit matures? When it matures, that is an inflow. If we go to our balance sheet, non-current assets, we've got fixed deposit, 500,000 minus 200,000 is equal to 300,000. So what happened with that fixed deposit? It decreased with 300,000. If it decreased, it means it's now less. That money was paid into our bank account. This is why it will have inflow effect. Inflow, no brackets. Once we are done now, we can calculate what is the total operating activities. It's cash generated from operations minus interest paid, minus dividends, minus tax paid. If we look at the total cash flow from the investing activity, it's minus purchase of non-current assets plus proceeds plus the decrease in the fixed deposit. Moving on to the financing activity. When we look at the financing activity, we say we need money. What is our options? We can either sell shares to the public or we can borrow money. But now it's not that simple. You need to remember, when I look at my ordinary share capital, it consists out of the issuing of shares and the repurchase of shares. So I cannot just take the difference and say it increased. If it increased, it means that money came in. We've issued more shares. If you look at the mortgage loan, it's another option. We can borrow money. I cannot just say it increased, therefore that was an inflow of cash, because my mortgage loan consists out of repayments of loan as well. And if interest is capitalized, that repayment will include the interest. Now remember, interest was calculated in the operating activity. When we look at the repayment, we always look at in the cash flow statement in the financing activity, the capital amount. So it makes it more complicated. So to solve this, we can open up a T account. Another thing you need to remember when we're now going to look at the ordinary share capital, this account is always at average price. And when we complete the cash flow statement, the repurchase of shares, it must always show the total amount that we've paid. So looking now at the information given, they provided us with the ordinary share capital in the beginning. So I'm just going to say balance brought down. We calculated the balance at the end by taking shareholders' equity minus the retained income. That equals the balance at the end. If I look at the information, they said to us on the 1st of May 2020, 400,000 shares were issued or were in issue. I'm just going to show my calculation in brackets. On the 30 June 2020, 200,000 additional shares was issued. So they only provided us with the number of shares. They didn't provide us with the total amount or the price per share. means that we will need to solve that. Then they said 50,000 shares were repurchased at R3.14 more than the average price. So they didn't tell you the total repurchase price. They only said to you what is the amount above the average price. So how do we solve this? We need to find the average price. Whenever the repurchase of shares happened after the issuing of shares, we can calculate the average price by taking the balance at the end. So we're going to take the total divided by the number of shares, and that equals my average price. Now we can immediately say 50,000 times the average price. As soon as we show that figure, we can now calculate the balancing figure, the issuing of shares, by taking the debit side minus the credit side, the balance of 960,000. To find out now what is the amount that will go to your cash flow statement, if the average price was R2.56 and the amount above the average price was R3.14, it means that we paid a total of R5.70 for the shares. And now we just times that by 50,000. So on my cash flow from financing activity, the proceeds from shares issued, 576,000, which we've calculated by completing the T account. The repurchase of shares, 285,000. It must be shown in brackets. Why? It's an outflow of cash. If I look at my loan, they told me ABC Bank agreed to increase the loan with 200,000. So you can immediately take that to the proceeds from long-term loans, 200,000, no brackets, it's an inflow of cash. During the year, monthly repayments were made to ABC Bank to cover the mortgage loan repayment and the interest. Interest on loan is capitalized. It means we need to calculate this. Now to find the repayment of the loan, which includes the interest now, we can open a T account and we open the loan account. The balance brought down was given to me in the beginning. The balance brought down at the end was given to me. Balance brought down means balance carried down. Interest was given to us, 104,000, and they said it is capitalized. Now you should know a repayment will always appear on the debit side. If we decide to borrow more money, it will always appear on the credit side because our debt will increase. So we know that our loan increased with 200,000. So we're going to say 200,000. My repayment now becomes the balancing figure. To find that, we're going to take everything on the credit side minus everything on the debit side. This is now the repayment, which includes the interest. So that's not the figure that goes to the cash flow from financing activity. I need to take the total repayment, which includes the interest, and now I'm going to minus that interest amount. That will go to the financing activity, repayment of long-term borrowings, and show your calculation in brackets. My final answer, 60,000, must also be shown in brackets. Why? It's an outflow of cash. There is an alternative way to also calculate the repayment of loan. If we take 800,000 plus 200,000 minus the 940,000, so we eliminate the interest, that will equal exactly the same amount. Now we can total the total cash flow from the financing activity, proceeds from shares issued, minus repurchase plus proceeds from long-term loans, minus the repayments, equals the cash flow from the financing activity. We have now completed the operating, investing, and the financing activity. If you look on your cash flow statement, if you take the cash flow from the operating activity minus cash flow from investing activity plus the cash flow from the financing activity, it must equal exactly the same answer that you've calculated when you calculated the net change in cash and cash equivalents. Thank you very much. I hope that you've learned a lot with regards to cash flow statement. In our next activity, in activity 5, we're going to look at another cash flow statement activity, and we're going to see how the fixed asset note can be incorporated into cash flow statement. I want to leave you with this quote: note to self, winners aren't who never fail, but people who never quit.